Hi there, this is going to be our last tutorial that addresses finding value drivers based on information from the income statement. And in this particular case, we're going to be looking to calculate or find the dividend payout ratio, which refers to the percentage of net income that this firm has used to pay out to shareholders in the form of dividends. So we're going to look and see what percentage of net income has gone to paying dividends for the last 3 years. And we're going to take the average and we're going to use that to forecast what they might do in the future. Because what they don't pay out as dividends, they keep as retained earnings. And so we really need to know that ratio, or at least estimate it. So in order to do this, I'm going to need my statement of cash flows. And I'm going to need to add a couple more lines to my income statement, just like I did when I calculated sales growth rate. I'm going to add dividends. And I'm going to add addition to retained earnings. I'm also going to add a dividend payout ratio, which, like my sales growth rate, is going to be aligned to the right, and it's going to be italicized. So to get my dividends, I go to my statement of cash flows. So here is Macy's statement of cash flows as pulled from Yahoo Finance. And I can see here that dividends paid 2013, $324,000, 2012, $148,000, and 2011, $84,000. So all I need to do is bring that information over into the spreadsheet that I've been working on. So my dividends paid are going to be, I'm entering them as a negative number, although you don't actually have to, 324,000, and then 148,000, and then 84,000. So the addition to retained earnings, the money we kept as a firm, or the money Macy's kept, the percentage of net income or the proportion of net income that they kept is going to be equal to the difference between net income and dividends. In this case, because I entered it as a negative number, I can just add it. If I grab that and right-click, I can see that we added $1,011,000 to retained earnings in 2013, $1,108,000 in 2012, and $763,000 in 2011. So the dividend payout ratio is the percentage that was given to shareholders as dividends. And so because I entered dividends as a negative number, I'm going to have to make this equation negative. So my dividend payout ratio is going to be the negative percentage of dividends as a percentage of net income, otherwise known as 24.27% in 2012, 11.78% in 2012, the first one was 2013, pardon me, and 9.92% in 2011. So that's a wide array of payout ratios. They seem to be increasing. Do I think they're going to continue to increase in the future? Not necessarily, right? I don't really know, and I'm not going to feel very confident about this prediction. But I'm going to use the average. I'm going to use the average because maybe Macy's allows their dividend payout ratio to fluctuate. And without more data, I really don't know. But the average is a pretty good estimate, and it's going to work just fine for us for these purposes. So the average of those is 15.32% of net income paid out in the form of dividends to shareholders throughout the year. So that dividend payout ratio that I'm going to use is 15.32%. And that's where I get my dividend payout ratio. And this concludes all of our income statement value drivers. From here, we're going to move on to the balance sheet. Happy calculating. And of course, as always, if you have any questions, send an email.